You do not want to miss this episode. This episode features a valued client from InvestorKit, Nafiz. He's been on the journey with us since 2019, and his story is just phenomenal. Someone in their mid-20s started with their first investment and it could have gone very, very wrong. However, it didn't. And in this particular episode, we're going to break down what happened versus what could have happened and how it's been a difference of $1 million in equity gain. Now, Nafiz has built a portfolio with us of 5 properties and he's just turned 32, which is a phenomenal achievement. So jump into the episode where we dive into his portfolio journey, the $1 million mistake that he's avoided, and also where we've taken his portfolio to today, including what's next and the X factors to getting there. So tune into another episode of the Property Nerds podcast.
Nerd alert! Property Nerds, the home for data-driven property investors, where we uncover Australia's hot and cold markets, latest headlines and trends.
Nafiz, welcome to the show, my friend. You're officially a property nerd. Welcome, welcome.
Oh, thanks, mate. Nice to be called a nerd.
Man, we've had a journey together now coming towards 7 years. And I just want to say a heartfelt, firstly, thank you for trusting me when we first kicked off InvestorKit back in 2018-19. Man, what a journey it's been. So I guess I thought we'd chat today to go firstly back to where it all started.
Sure. And
even before us, I want to get into your mind in terms of what were you thinking? Like before you go working with us, like where was your head at that point?
I was in my mid-20s back then, so a bit older now, but I just wanted to kind of get my financial situation sorted. I grew up working class in southwest Sydney, and you know, my parents, they worked quite often 1, 2, 3 jobs at a time just to make ends meet. It was kind of like that classic migrant story where they come from overseas. They're actually very educated from well-to-do families overseas. My background is Bangladeshi, but then coming here, they're kind of starting from ground zero. So they just had that work ethic that really instilled in me. And I saw them struggle. So I just thought, okay, well, I don't want to be in the same position. I've got a massive leg up, you know, living in Australia, being here my whole life. So why not take advantage of it? And I felt like up until my mid-20s, I was kind of on the right trajectory. I was reading finance books, listening to podcasts, Rich Dad, Poor Dad, Robert Kiyosaki, all that kind of stuff. Yeah, classics. So I was investing in shares. But then I think I just felt like it wasn't moving quick enough.
Yeah.
And so I just started to go out on weekends by myself. I'd have a full list on a notepad and pen. It's a bit old school, but just all the properties I'm going to go inspect. I was looking at 2-bedroom apartments anywhere as close to the city as possible that was within my budget. I was getting today you probably get nothing, but I was probably looking at like 500 to 550K properties, 2-bedroom apartments. Most of them were like 1970s apartments in areas like in New South Wales, Rockdale, Campsie, Panania, things like that.
Yeah.
And yeah, just kind of like, just going to open homes and killing time in between the inspection. Some of them were like 2-3 hours apart.
So you're properly committed to that journey.
Yeah.
The search, the hunt, I want to get engulfed in like property learning, property inspections. Like, where did this bug come from? Because obviously shares and stocks and things were your first go. Moving quicker seemed to be a thing that you wanted to do. But where did that interest in property come at that point?
Probably 2 things. First thing, just growing up in Australia, like we have this fascination with property as like a vehicle to accelerate wealth. And then just secondly, for myself, I felt like shares wasn't growing fast, and through just, self-education and self-development content, absorbing that, I just saw that if I could buy a property and use leverage, so, borrowing money from a bank, then the cash on cash returns is much faster. Like if I had 50K in the share market, grows by 10%, that's 5K, net increase. But if I have 500K in a property and it goes up 7%, that's 35 grand straight up. So it's just a lot quicker just because of that leverage.
That leverage masterclass, right?
Yeah, exactly. So that was like, okay, it's a quicker way to go about it.
Yeah. Now, when it comes to the decisions, you obviously didn't make that decision, which, touch wood, we'll tell you a bit of everything here.
Yeah.
That's great. But I want to know what made you go to the other side, because now you've gone from DIY, running through opens, back to back, checking out properties behind, actually in your backyard, right? Everything, this is where you're thinking of, to going, let me now go to the professionals and the other side of the country.
Yeah.
So where did this flip happen for you to go from units, back out investing, DIY day to day, to professional support, other side of the country, a house?
Yeah, I think two things. There was that Facebook group that we're in. So I'd ask questions in it all the time. I'd see other people respond. I saw you respond a lot of the time, and you'd always give very detailed, eloquent responses. And this was pre-Chat GPT, and this was at the start of your business as well. Yeah, so you did the work. So I'm like, all right, this guy's, he's being legit here. And then just, having that conversation with people online and people who are ahead of me in the journey as well, and just seeing them do well for themselves. And then secondly, there was this podcast I used to listen to a lot, and they would always talk about the benefits of using a buyer's agent, having a mortgage broker, having an accountant, things like this, having a professional team around you to help you. And it just made sense to me. I'm lazy by nature inherently, so I just wanted to pass on the work to other people who can help me and back me, and also have that peace of mind that people who are much smarter than myself and much more, they have that expertise in that area, working in my corner rather than me just trying to figure out things myself, because I have a full-time job myself in a completely different area, and, life gets in the way, social commitments, family commitments, things like that. So I just felt like I wasn't giving it 100%. So I'd rather reach out to people who know what they're doing, and then I have that in the background.
Now, fast forward to today, you built a portfolio of 5 properties now.
Coming up on 5, June, yeah.
And I want to know what that 2018-19 Nafiz, what was his why? What was his thoughts when he was building a portfolio? What were these things that were important to you? Because now, and 5 properties later, 7 figures in equity gain across the portfolio, everything's really building up for you.
Yeah.
What was that big why?
I think going back to my parents, so seeing them struggle, not wanting to be in the same position when I grow up and have my own family, but then also try to be that reliable son that can look after my parents, if needed, look after my siblings, but they're doing well in their own rights, having, grown up here and being professionals themselves. But just being that dependable son that can, back my family whenever needed in future. And then also with my wife in future, if we have our own family, also just be someone that can provide and look after our family for the future as well. That's probably my biggest why.
Fees, mate, how has your life changed outside of property investing? Like with all these moves that you've made, surely it's kind of made you feel a little bit better about your financial security and retirement and stuff like that.
Absolutely. In terms of, I guess, day-to-day anxiety about personal finances, not so much anymore. I don't feel well off because I have a lot of debt. But then
Jack loves debt.
Yeah, I mean, you've got to love debt over time. Like, it is something that people struggle with, especially at the start of the journey. But I think day to day, I do have a lot more peace of mind. I used to be very frugal. I think I'm not like an exorbitant spender or anything like that anymore. But I'm a lot less frugal now, where I can actually enjoy some things in life from time to time. Whether it's going out for a nice lunch or a nice dinner, going on holiday, with my wife, or taking my parents out to, like a nice dinner or something like that. That's nice, of course. The day-to-day mental peace is there. I just know that you need to, I've planted the seeds, I've added the water. Now I've just got to let it grow. Let it do its thing. So I'm kind of in that position now where I don't feel well off, but I know inherently that I'm in a good position where over time, if I let compounding interest take its course and capital growth take its course, I'm okay.
Mate, that is super underrated. What you just said before, as in people don't recognize how important that is. It's that weight on the shoulder, or it's like this tense how I'm acting in life, feeling in life. That coffee, that meal, I'll take care of the bill, the things for family. And funnily enough, it's not because we've actually got more liquid money. We often have less because we're paying mortgages. Yeah. We have, different properties and debts and commitments and bills. But it's like this weight off your shoulder and this tensity that's gone off to go, I know the future looks bright because of the moves I've made. So let me just relax. Let me flow with life a little bit.
Yep.
I've noticed that about you as well. Just from the outside, I feel like, you have had that as a change. I feel like just from my personal thoughts as well, you also look at repairs and maintenance differently too, because I find that the first property investor, Nafiz, was like, hey, I got this bill, what's this door handle? What should we do? Should we do this
I used to ask you for everything. And I think also because I think at the start I was a bit anxious and also spending a few $100s here and there. Now it's more the point of, okay, look, if it's not, tens of thousands of dollars, happy to get things fixed up and make sure my tenants are in a good position and living in a good property. And then also, I'm a tenant myself, I rent-vest. So, I hope that my landlord looks after me whenever needed. So I try to reciprocate that where I can.
Such an important lesson, man. That's maturity right there, both in your growth as an investor, but also your mindset from knowing even though your actual financial capability, people don't recognize that. Like your financial capability in terms of the free-flowing money you have is worse the more you are an investor. Because you're like, I had this much savings, I save less now, I save less now, I save less now. But it's wealth building on paper for the long term where you're going to one day realize that. It's the mindset game. Yeah. And you've completely transformed on the inside and outside, made across property investing and in life. And that's pretty special to see.
Yeah, mindset's huge. I think having that growth mindset's very key. I know it's a bit of a cliche, but 100% it works. You just got to give it time. Don't get stuck in the negativity of things. If I'm going on a tangent, let me know. But I was just thinking just then as you were speaking that, mindset is so key where you think about where I'm going to be in the next few years. It's hard to tell, but if you do the right steps now and let time take its course, then you're going to be okay in the longer term. I think a lot of the time when we read the news, cost of living is very high, interest rates being high, although they're coming down now. We had 25 basis points cut the other day. Things like this can create anxiety, tariffs overseas as well. But I think if you are able to just focus on yourself, what's within your control, then that can always help. And I think, being a millennial, our common complaint is housing. And I don't own a house here in Sydney. I appreciate, it is a bit of a point of anxiety for myself and my wife because we do want to buy a principal place of residence at some point in Sydney if we can. But also I accept that, there's other ways to generate wealth elsewhere through interstate property investing and taking a proactive approach rather than just dwelling in the negativity of things and feeling like I can't do anything here.
Yeah, Nafiz, I think you really raised a really important point where people always think about investing from the financial point of view, but they don't always think about it from the mindset point of view. And what you sort of alluded to is that there's always going to be doubts. When we talk about news, usually they're trying to get your attention and oftentimes they'll use negative stories to get your attention.
It's what sells.
Yeah. Exactly right. Yeah. And if we think about your journey, you went through COVID, you went through, a whole bunch of interest rate hikes, tariffs, wars, everything going on. What do you think motivated you to continue on that journey despite all of these doubts that have been created in the world or, trying to be created in your mind as well?
Yeah, I think just trying to block out the negativity. So just focus on what's within my control, knowing that this is a marathon and not a sprint. So if there's a period where I can't invest or I'm not getting a pay rise at work because the company hasn't done well, then just kind of stick it out over time and know that, there's going to be a sunny day in the near future. We're just going through a rainy period. Life is just ups and downs. And you'd hope that as it goes up and down, it's still going overall upwards. Kind of like the share market goes up and down, but it's still going an upwards trajectory. So I kind of view things that way where, this is just a season. So this season right now might be a difficult season, but then the fruitful seasons will come.
Yeah, that's awesome. Because I think what we see a lot in our business is that people will start out really excited, ready to go for their first property. And then it kind of fizzles out a little bit as doubts creep into their journey and they start thinking, oh, what about this? What about that? And I think that's what stops a lot of clients. It might not actually be the financial blockers that they're facing, whether it's, lending or whether it's their cash flow. It's mentally, they get a little bit scared. They don't stick the path of executing on their actual plan that they designed at the start. Let's be honest, spreadsheet fatigue is real. That's why we introduced ARI, the Advanced Rental Income Calculator by InvestorKit. It's Australia's most sophisticated, user-friendly tool for analysing potential property returns, and it's built to replace all those clunky spreadsheets you've been wrestling with. ARI gives you clear cash flow and growth projections over 10 to 30 years, updates in real time with AI-powered data, and evolves based on your feedback. Whether you're new to investing or scaling up your portfolio, ARI helps you crunch the numbers like a pro. Access it now. Head to investorkit.com.au, link in the show notes.
Nafiz, on that time, it's like 6 years now of us working together.
Yep.
Like if I just timeline this journey out, it's pretty special. Like 2019 was the first purchase in Brisbane.
Yes.
It was around 418,000.
Yeah, 14.5. Good memory.
There you go.
Yeah.
Good memory, right? So, fun fact, like I can remember almost over 1,000 purchases we've made.
Right.
We've done over 2,000.
That's crazy.
It's wild. Like,
Yeah. Well, that's good. That's going to keep your brain sharp. Yeah.
I wanted to ask, like, that property in your latest valuation, if I'm not mistaken, came in the 900s or around that mark?
Yeah, I think like around high 800s now. Last time I checked, yeah.
That's huge, right? So not even doubling in 10 years, we're talking in 5 years.
Yeah, Queensland's done very well.
Then you went over to Adelaide next.
Yes.
That was purchased in the high fours, if I'm not mistaken.
Yeah, 492.
490?
Yeah.
490s?
Yeah.
And what was the latest valuation on that for you?
797.
Unreal.
Yeah.
Unreal. So now you've gone from Adelaide. I think the one after that was in Townsville.
Townsville, right.
We'd purchased that in the 440s.
Yeah, that's right. Yep.
What was the latest valuation for you in there?
660?
Yeah.
Yeah.
Yeah. So I'm going through these purchases because from there we go to WA.
Yeah.
And what I want to point out, and I think the most recent one was in Victoria.
Yeah, settling soon. Yeah. We just exchanged last week, so settling in mid-June.
So this is another thing. This portfolio diversity that you've got is something I always tell investors to keep front of mind. And part of building that resilience you've spoken about before as well is about having an investment portfolio that does the diversity piece or the resilience piece for you.
Yep.
Because now it's like you've got Far North Queensland, Southeast Queensland, Western Australia, Victoria, and South Australia. Like multiple states, diversity, higher yields, affordable assets. I mean, how do you feel when you look back at the strategy now, going through all these? Did you think of that strategy when you first started, or has this evolved as it's come up? And how are you feeling about the strategy looking back at it all?
Yeah, it's great in hindsight, but at the time I remember I'd always like badger you about why aren't we buying in Sydney or near Sydney? Because I just don't know these areas. It gave me like a bit of anxiety thinking, okay, I don't know what's in the middle of regional Victoria or regional WA.
Yeah.
But the numbers have done well. They speak for themselves. But I always thought, okay, let's buy in Sydney or Melbourne or Brisbane, or let's just buy in the cities or near the cities, suburbs of the cities. So in hindsight, the strategy's worked really well. We've diversified. So we've the regional WA purchased in January this year and the regional Victoria purchased to settle in mid-June this year. Really diversified now. We're across Queensland, South Australia, Victoria, WA. That's 4 different states.
That's unreal.
Yeah.
Well done.
So yeah, I think as a New South Welshman, still haven't cracked New South Wales. So that's
on your list.
It's the agenda, but like ideally it's a principal place of residence to live in Sydney for my wife and I. But definitely feel like the strategy has worked. I'm definitely someone that likes a bit of, the risk mitigated. So through diversifying the portfolio by having across all these different states, having city, suburban, and then also regional, that also helps. So I think, and also just the various life cycles of the property market, whether it's boom phase or it's a bit more mature now. So yeah, I think for a rainy day, we're in a good place. And that's testament to the InvestorKit strategy.
Yeah, you mentioned you had a wife. How does she feel about inheriting all this debt?
That's a good question. I think to her credit, she was probably a bit easier to come along for the journey, maybe compared to some other people and other people's partners, just because she had invested in the past herself.
Nice.
She hadn't done too well. She did that very typical thing that she just bought what her parents advised her to do. So she just fronted the deposit by saving while she was working, but her parents chatted to the real estate agents and pretty much sorted it out and told her just to sign. But she bought in areas that were higher density apartments and new apartments. And in hindsight, the capital growth really wasn't there, where it was either no capital growth or the capital growth was so minimal that after real estate fees, land tax, etc., all these additional costs that you have, solicitor fees, she was like net even. So I think she was open to coming along the journey with me because she is familiar with property and it's really something that her parents are really into as well. Like they love property. But I think with her, she's happy for me to kind of take the lead in that situation. And I definitely respectfully always involve her. I want her to be across it. And if I get hit by a car tomorrow or something like that, I want her to kind of be at a place where she can run things herself and she's not feeling like, oh crap, I've got all these things to do. I don't know where to start. So I've really just made a concerted effort to bring her along for the journey and try to educate her as much as I can. That's within her realm of interest because I also know that I am a bit of a property nerd.
Yeah.
And
welcome to the show, mate.
Yeah, she might not be as interested at times as me. So I bring her in when she likes to be interested in the topic.
Well, mate, I mean, me and Adrian have been chatting on something that you've got to check this out. I haven't spoken to you about this in the past.
Right.
But it's when we show you this today, your mind's going to be blown. Now, we talked about some of the properties we've purchased together in the 5 places. Now, fun fact, it's around $1 million in equity gain when you add up the assets across Brisbane, Adelaide, Townsville, and then also regional Victoria now you're coming through, and WA. That's massive. For someone, have you crossed 30 yet?
I am 30.
30 now?
I'm 32 now.
32 now? There you go, man. So just crossed 30s, started mid-20s. We want to give you a bit of a time machine. We're going to take you back in time to 2018. We're going to imagine we never met. We're going to imagine you never had any thoughts on using a professional. And you went back in time. Adrian's going to still
how badly I would have done.
Absolutely. And it's funny you mentioned about your wife making the decision to purchase the apartment, because that was exactly what you were thinking of doing at the time, right? You were at that decision point of, should I purchase the apartment or should I go on this, take the leap of faith and trust this man over here with your journey? But look, if I give you some numbers, and I'm actually not going to compare all 5 properties, I'm going to just compare the 3 first properties that you had and how that compares with what you could have done with the apartment.
Sure.
So the apartment that you're going to purchase, let's call it, west, I think you mentioned it was about 20Ks into the west, around that kind of area.
Yeah.
That apartment, in terms of median price, it's actually gone down.
Okay.
It's lost value across this whole time.
Right.
So what I did is, as a calculation, gave it a little bit of a benefit of a doubt and kept it the exact same value for today. And then we projected it from 2018 to 2028, 10-year time frame where we're comparing the 2 scenarios. If you did that, your apartment in 2028 would be worth $597,000. You would have made $147,000 equity. Sounds all right. And that's just assuming 3% growth from today till 28. In terms of the scenario that you actually went down and, what you've managed to do with your portfolio, same exact time frame, but with the results that you've got and what we've assumed is 5% growth for your assets. I know they've done a lot better in the past.
Being conservative out with 5%.
We want to be really conservative. If going forward, just assuming a conservative 5% growth there, the value of it is 3.05 mil.
Wow.
In terms of portfolio value. Equity is 1.52 million.
Wow, unreal.
So the difference, how much difference do you think that is?
Oh, that's like 1,350,000 or so roughly.
Wow.
Yeah, we're sitting at close to $1.4 million of equity in opportunity cost just between the 2.
And that's only between the 3 properties, not all 5, right?
Yeah.
Now, that's massive. Yeah. And I just want to say, firstly, thank you for trusting us, but also thank you for backing yourself, because like Adrian asked before, tariffs, global wars, COVID, interest rates rising, political party changes, things all over the world happening, more social media news, more friends in a circle in our age that aren't able to do or haven't been able to do what you've done, which means there's more people saying the other way's better. Then there's also social life. We see friends grow. They get their first home to live in. It's an apartment. They feel comfortable because they've got that location. They've got that comfort of the shelter and not constantly moving as renters or anything like that. And you're like, shall we? Oh, that would have been nice. All of these pressures, yet you stuck through it all. And without even the full consideration of the journey, well over $1 million in equity gain in comparison to what would have been the same movement. Looking at that, how do you feel about all of that?
Yeah, again, peace of mind. Going back to that question about how I feel day to day, I think I have that peace of mind because I know I have that growth. Very grateful to InvestorKit, my mortgage broker, anyone that's kind of helped me along the journey so far. I think without that expertise and having the professionals in your background backing you up, I'd kind of, maybe I would have bought a property or 2, but I probably would be in a much worse position. I'd like to think I would have done as poorly as that first scenario, but, I tend to back myself a bit, but I wouldn't have backed myself to where I am today without the help of InvestorKit. So, yeah, I know this sounds like a bit of a plug. I'm on a podcast, which is, the host, the guy who found InvestorKit, but honestly, it's helped me so much from a personal, wealth perspective and peace of mind perspective where, in future, I know that, if things go pear-shaped, I'm in an okay position to react and readjust accordingly or help my family if needed. So yeah, it's been really good. And I'm also, really grateful. I saw this speech by Snoop Dogg in the past where Snoop Dogg just said, I just want to thank myself for, hustling hard and working hard. Well, I want to thank myself, like you said, Arjun, just being proactive and just taking steps rather than just being negative, because I have plenty of, family and friends that, love to complain about the property market and things like this and hate on property investors. But I think, if you're proactive and you take active steps in generating wealth for yourself, and you're educating yourself and you're consulting professionals or, consulting people actually in positions that you want to be in rather than just any other person on the street, then, I think by doing those things, I was able to accumulate, a decent portfolio at this point in time. But yeah, there's levels to the game, and I'm sure there's people here who are much higher positions, still relative. So happy where I'm at so far. Yeah.
Yeah, really well done. So you've done so well. And like you said, you got to thank yourself. You went through it. You put in the work. It's what you deserve.
Yeah. Mate, it's pretty epic, man. Just if we're going to wrap up on one note there, like it's to see someone in their 30s, and funnily enough, I mean, we did the mapping not long ago. We were looking at your portfolio, and technically speaking, you don't have to buy any more investment properties.
I remember you said 5 and you're sorted.
Yeah. You're essentially now at a point where like it's very rare for someone in the early 30s as a couple to go, hey, you know what, if we bought no more properties, we're still set for life.
Yeah.
Not including super, not including anything else. So, mate, just hats off to you two. Really stoked to just be here. Looking back 6 years and where we were, I remember we caught up for a coffee near Macquarie Bank's building.
Yeah, I was working at Macquarie back then across the road. I remember
There you go,
mate. It was in the American Express building. Yeah.
Who would have thought that coffee from there to here today? Proud of you, mate. It's just special to see. And thanks for sharing your story, sharing your journey with us here at the Property Nerds podcast. And we've got a fellow nerd here in the making now.
Yes.
So, thanks again.
Yeah, thanks for having me, guys. Appreciate it.
Awesome. Thank you so much for tuning into this podcast. To hear more like this and to help us spread the word, don't forget to leave us a rating and follow along for our next episode.
Game over.